Good afternoon. It's the 24th day of February 2022, a dark Thursday after the President of Russia, Vladimir Putin, ordered the attack on Ukraine this morning, forcing an emergency meeting of the UN Security Council in New York. Beyond that, we have seen markets across the globe take a hit after this attack. The Russian market itself opened on a negative 2.7% shed in the first hour of trading. The Nairobi Stock Exchange itself suffered significant losses as all indices were on the red. This forms the basis of our conversation today as we see the Russian-Ukraine war and the global markets. I'm your host, Odhiambo Ramogi. Before we go into the conversation, let's have a look at how the market in the Nairobi Stock Exchange performed today. We'll start with the gainers, going on to the losers. And Liberty Kenya is our biggest gainer of the day after it registered 5.71% growth, topping the charts of the top five gainers, closing the day at 7 shillings and 40 cents. East African Portland Cement made the headlines today as well, closing the day at 6 shillings 98 cents, being 2.95% up. BOC Kenya equally made some good headlines, closing the day at 93.25, being 2.75% up. Express Kenya Limited did 4 shillings and 2 cents, being 1.77% up. British American Tobacco, BAT Kenya, was also on the green today, closing the day at 496 shillings, being 0.97% up. As you can see, even the gainers were struggling, and the highest being at 5%, the lowest being at 0.97%. Let's look at the losers. Olympia Capital Holdings topped the chart of the losers, having shed off 9.05%. Unga Group Limited was also here, closing the day at 27 shillings 30 cents, being 9%. EA Guards made the list here at 12.35 shillings, being 8.5% lower. Sasini PLC was also here at 20 shillings 5 cents, being 6.31% lower. Safaricom PLC, this was expected because foreigners are exiting the market, holding on to their money, and closed the day at 34.55, being 5.6%. As you can see, the highest loser in the top five is 9%, and the lowest loser is 5.6%. Tells you that we are on a losing streak. The movers of the day, Safaricom did 18,336 shares. Those are net exits, most of them because of the war, and we'll have that conversation in a bit. ABSA did 1.3 million shares. KCB Group did 1.1 million shares. Equity Group did 500,000, and East African Breweries did 379,000 shares. That's how the market fared in the day after the declaration of war, and in fact execution of the same declaration by the Russian president. This morning we had received pictures of missiles being launched onto the Ukrainian population, and one of them being a Ukrainian airport being hit badly by the Russians. Well, to start us off in this conversation, perhaps let me introduce my guest. I am joined today by Mr. Manoto, Shadrack Manoto, who is a research analyst at Kingdom Securities. and he will join us to have conversations on the Russian war and the global markets. Karibu sana, Bwana Manoto.
Thank you for having me.
Excellent. Give us a commentary of the local market performance and what you make of it.
Generally, the market has been underperforming and has been, in fact, it's going even to perform worse on the international market reaction. Especially, we have seen in terms of volumes moved, currently there is a drop in terms of the volumes that are traded, but today we have seen today there is a very big jump in terms of the volumes traded from Monday, Tuesday until yesterday. We had almost yesterday we had around 5 million shares being traded, but today we are seeing a spike because of measure of an exit, especially in Safaricom. And this is from my research side, 90%, over 90% of Safaricom exits are foreigners, and this has affected the market heavily. So therefore, the market, we expect it to continue edging downwards regarding with regard to the market information, especially the international market.
Yeah. Well, globally, Putin has ordered the attack on Ukraine last night or this morning, depending on where you are. How are markets across the globe responding?
Globally, equities market are still suffering the more, with the bonds market gaining. We have seen more, especially people exiting, foreigners or rather investors exiting the equities market and trying to invest in bonds. And this is especially if you look at Europe, the European market, there is a drop around 2.6 as at yesterday, and today there is a drop around 2.6% in terms of the value, in terms of the price movement. And also this has affected especially the banking sector in the global market. And the European banks, they are in fact they are losing, more especially those foreign, the Russian origin banks, those they are losing heavily. Therefore, generally globally we expect equities market to underperform, while the bonds market and also even the commodities market, they're going to in fact perform super highly.
Have you had a look at some of the indices in Europe and America? Perhaps you can comment on that, the performance of the FTSE 100, S&P 500, the Dow Jones.
Okay, probably I might respond on the S&P. With regard to the information in the Russian market, with the Russia and the Ukraine, S&P market, the indices are going to, in fact, they have been edging down, but especially in the USA market, the indices, market indices for the US market, they are going to in fact, to move upwards, more especially S&P indices. And we expect the same, more especially to the US dominated counters.
Yeah. The Russian market itself shed off 2.7% when it opened, the day opened. Is this indicative of a resilient market, or should we expect more exits from this?
Surely we should expect more exits, especially from those from the foreigners in the Russian market. And this is likely to be affected by those who are, like now, we saw the US trying to evacuate their people from that country. So that means in terms of even the currency performance, that one is going to even affect the US market even more intensely. But looking at the Russian market, its performance, it must go down. It has to go down, especially on sanctions from the US, sanctions from the European Union, and also the multinational organizations. They have to, most of them are fading that market. And therefore, we expect that to affect the Russian market heavily. They are going to lose anyway, but unless they change their stand, mostly foreigners in that country are going to exit.
Yeah, from the
Russian market. Yeah.
At what level of losses are we looking at in terms of the Russian market? Is it going to be within the province of 10%, 20%?
My projections will be like now. If you look at in 2014, we saw the effect was so intense, and in terms of even the oil prices.
Are you talking about when they attacked Crimea?
Exactly. So the same case, we expect it should be.
What was the effect then?
We saw oil prices had to rose up.
No, I mean in terms of the indices from the market, the Russian market, what was the effect then?
The equities indices dropped significantly, and of which that is what we expect currently. That is why you are seeing in the market there is a reaction, on a sentimental reaction, especially in terms of foreign exits, and not only foreign exits, but exits in all over globally. There is an exit in terms of the equities market. And we expect this to continue, more especially to the Russian-dominated foreigners. Those who for the Russian-dominated companies, they have to lose. In fact, we expect them to lose the more. So, in terms of indices, definitely they'll have to drop.
Yeah.
Yeah.
Fair enough. The U.S. president has outlined possible sanctions on Russia in case of an attack. Do you know what these sanctions are?
What we expect, possible sanctions are more especially trade sanctions, of which we know that Russia is one of the main exporters of oil, and also it also exports natural gas. And also looking at foreign investment, Russian foreign investment, we have seen even from Europe's side, they have in fact freezed. There's a freezing in terms of the banks that are dominated by the foreign banks owned by Russia that are currently in European countries, in other European countries. There is a freeze in terms of their transactions. Transactions have been completely freezed, and this is majorly affecting not only the Russian economy, this is affecting also the globally, even in inflation. So these sanctions are especially trade sanctions, and also they will be hindered from the international market in terms of their sale or whatever they export from their side. There is a drop, so we expect them to be inbound, more especially to their own, to the US, the Russian country. So trades in that side is going to be affected heavily. There will be a drop majorly also even in the currency. They will experience a drop in their reserves, which means the imports, the Russian imports from whatever the commodities Russia imports from other countries, there is going to be a hinge on that. And also this will come from especially the foreign reserves, more especially which is used in terms of trade, external trade, also for the Russia against other countries. So these sanctions are majorly trade sanctions.
Okay. Many of us feel that the sanctions that the US is recommending are a slap on the wrist, considering the effect of this war globally. Because an attack on Ukraine, a military attack on Ukraine, is in fact a military attack on Europe, and will in fact affect the rest of the globe. We feel there's more that can be done against Russia. I don't know if you share this feeling.
Surely more should be done on Russia, especially on its adamant, and also the way it has been adamant to respond, also to respond to the calls of the international community. And personally, I recommend that especially on trade sanctions, their imports, there needs to be stricter measures taken on them. And however, caution should be taken because as diplomatic measures should take place, because the global market is suffering because of this. We have seen the equities market suffering because of this. So dialogue is the best option, and also I insist on dialogue for the two countries and also the international market to push for a dialogue such that the other countries of the world cannot suffer because of this one country. So I insist on the dialogue.
I mean, dialogue is a good approach, but we've not had success with dialogue for the last 1 month. The French president visited Russia and had a long table meeting with Putin, which did not yield the desired effect. Last week there were talks that Biden and Putin would sit down and have a conversation. That hasn't materialized. NATO has made effort to have conversations. That hasn't materialized. What next then if we are having a war and then instead of at least having proper sanctions on these guys, you slap them on the wrist with very minor sanctions, as it were?
As you say, proper sanctions are good. And also, as these measures are put in place, there should be a way out. Because in terms of global production, or rather, even locally, what we obtain from, let's say, the Ukraine market, we suffer a lot. The country is going to suffer a lot. So, of course, stricter measures should be taken. Like,
would you know what we import from Ukraine?
Kenya imports almost 75% of wheat from Ukraine, and also a bit of some production goods, including steel and also other agriculture, but especially on wheat. Wheat prices are going to go up, especially on this war. And also, when they go up, we expect things like bread prices, prices of chapati. In fact, they will have to be affected over. So inflation is expected to rise. So my action will be, as they take stricter measures on Russia, dialogue still should be insisted. And also, of course, I also believe in prayer. So dialogue with that, it can also work. Because as the countries around those who import several goods from, like India imports, I think, a lot of steel goods from raw materials from that country. So not only African countries, but many countries are going to suffer because of this. So a solution should be, in fact, found.
Fair enough. A solution should be found to the Ukrainian crisis or the Ukrainian war now, because there is a full-blown war going on the border of Ukraine and Russia. And because of this, I think we can take a break as we just think through some of these things. And when we come back, we will be able to talk about some of the things some of the decisions that are already being made in the investment front, as many investors go commodities way, and how commodities have been affected, and how perhaps Kenya will also catch a cold. Don't go away. Stay tuned.